We are massively investing in artificial intelligence, but the reality is that for the core of what we do, the matching engine, the price formation, artificial intelligence doesn't help that much. It helps a lot asset managers in approximating price formation and in taking to the next level what passive management or algorithmic management was doing before when it comes to technology coding, IT, when it comes to support functions, when it comes to improving clients' experience. We are massively deploying new solutions. It's not a one-size-fits-all solution. It's not free. Many people make the usual confusion to think that AI is just like internet. It looks, sounds, and smells like all you can eat, but just for the first meal. But then when you get into the restaurants, after being attracted by all you can eat, the guys lock the door and they say, this is a new price for what you eat.
How has Euronext changed since its founding 25 years ago?
Euronext was created 25 years ago by a group of founders who had a vision to pull together exchanges to make European capital markets more integrated. It was a totally different time. Bill Clinton was running the United States, and Boris Yeltsin and Putin I were running Russia. Russia was becoming part of the G7. These were the happy years of globalization. We are in a totally different environment now, but the Euronext projects remain more relevant than ever. And the Euronext project has been developing in a very positive manner because today, as far as the exchange part of our business, which is now only a small part of what we do, because we are much more diversified than we used to be, but this part of our business, the exchange part of the business, is definitely the strongest equity market in Europe. We trade every day 13 billion euro, which represents 25% of all the shares, all the equity traded in Europe. This is twice the size of the London equity market. The single integrated Euronext European market in terms of technology platform, in terms of liquidity pool, in terms of order book, is by far the largest integrated equity market in Europe. So this is a very relevant market, and big difference between where we are today and where we were 25 years ago is the company is massively stronger than ever. When we were re-IPO'd in 2014, the market cap was 1.4 billion after Jeff Brecker had bought NYSE Euronext and has decided to cherry pick the good asset and to keep NYSE and to keep the derivative markets in London. He carved out and IPO the European business. It was a 1.4 billion market cap. Today it's a 13 billion market cap. We are almost 10 times bigger than when Jeff Brecker sold us. In Europe, the Euronext project becomes relevant both in terms of financial performance and in terms of tool to integrate European markets.
How has Brexit affected the trading landscape in Europe?
After Brexit, there's been a significant shift in Europe. London used to be the largest financial center of the European Union. The relevance of London as a platform in Europe has reduced. And in parallel, we have consolidated the European markets around Amsterdam, Paris, Milan, Brussels, Oslo, Dublin, Lisbon, etc., Copenhagen, and this has created the strength of the Euronext window today.
What are your priorities over the next few years?
The last plan has been an amazing success in every respect. We thought we were going to extract 60 million of synergies following the acquisition of the Borsa Italiana Group, and we have extracted 121 million. We are stronger than ever. The balance sheet, the financial performance, the balance sheet, we are 1.4 times net debt to EBITDA. We are single A minus stable outlook rated by S&P. We have an EBITDA margin of 62%. The company last year grew the top line by 10%, but grew the cost base only by 1%, 1.7% below inflation. So in terms of operations, in terms of operating leverage, in terms of financial performance, in terms of balance sheet strength, in terms of portfolio mix, we are where we want to be. But the next frontier is to accelerate growth. We are committed to deliver a CAGR growth of 5% in average per year for the next 4 years for top line and also for EBITDA, and we want to accelerate growth. And to accelerate growth, we need to diversify our business. Now, the good news is that the volume-related part of our business, which represents only 40% of the top line, is not doing well. It's doing extremely well. The beginning of the year is just amazing in terms of volumes. Cash equity trading volumes are plus 25% year to date versus last year. Fixed income trading are plus 50%. Clearly, volatility is back, not only in equity trading, but also in fixed income trading, in Forex, in electricity, power, and also in soft commodities, agricultural goods. So the volume part is doing extremely well, but we want to continue our diversification voyage. So the core priorities is how we can grow the company in corporate services, in new asset classes, in new components of the value chain like clearing, like settlement and custody, in like services to issuers, etc. And that's our core objective. So we are going to deploy a lot of efforts in organic growth. 25 is definitely a year of massive investment, massive hiring, massive investment in technology platform, and potentially of significant investment in M&A to accelerate the diversification of our top line.
Is Euronext looking into 24/5 trading?
We are in the business of making the life of market participants easier, not in the business of making their life more complicated. If they believe that it makes their life easier, why not? We just need to be careful and not to follow buzzwords with a lot of excitement. And there are two things that need to be carefully thought of. The first is clearing and settlement, in particular clearing. You may need some moments of cutoff to organize circulation of cash because you can trade 24/7, but you need some moments for clearing. And ongoing real-time clearing may create some risk that markets may not consider as proportionate to the value of permanent trading. The second, which is much more important, because the first one you could consider that with some technology and some stronger risk appetite you can do with it. The second one, which is much, much more important, is that in the life of listed companies, you need not trading moments to communicate price-sensitive information. You must have moments where you create space for all the market participants to understand the news, to analyze it, and to build a strategy. And then when they regroup to trade, they all regroup to trade with the same level of information. So one thing is to tolerate latency, arbitrage for trading. Another one is arbitrage of information, which for the moment is an assumption of capital markets regulations that require some windows. Now today the windows are between late afternoon and early morning. If those windows have to be reduced, why not? But I can hardly see how listed companies can issue information without being able to release that information outside of trading hours.
How has Donald Trump's uncertainty affected European markets?
There was a debate about the asymmetry in terms of valuation multiples between US assets and European assets. There was a theme in December, January. US valuation multiples are much higher in Europe, and they are not justified by the growth prospects of US companies that are not that larger than European companies. Also because European companies might have a weak zip code, but in reality, when you look at them, are much more exposed to global growth than to European growth. So there was a team within asset managers of moving back to reweight European exposure and to de-risk or reduce the exposure to the US. Then came the sort of new policy mix with a lot of creativity in terms of tariff, immigration rules, creating problems with peaceful neighbors, and creating uncertainty on the rule of law. and involving in decision making some individuals without a necessarily very waterproof organization in terms of conflict of interest management. All the features that you find sometimes in emerging markets with oligarchs, with rule of law uncertainty. And that has created an incremental move towards a safe harbor like Europe. The big question mark, is how long is this creative policy mix going to last? How damaging the debates on tariffs, no tariffs, oops, yes tariff again, maybe later. This tariff communication is going to last because capital markets do require strong rule of law. Capitalism requires strong rule of law. Market economy requires strong rule of law. When you own something, you need to make sure that you own it and that your property rights are not going to be challenged or that the way you do business is not going to be fundamentally undone. So the amount of unpredictable decisions and the longer it lasts, the more volatility and the deepest or the discount on US assets. And this discount on US assets related to the US political risk is not only in public markets, as you observe every day on stock prices and indices and Dow Jones, etc. It's also on private markets. I've met many people in Europe who say, we don't know whether we want to continue investing in the type of projects we had invested in the Inflation Reduction Act, because we don't know how long the environment is going to remain stable. So in that environment, there is a significant acceleration of integration of Europeans. The Europeans feel more lonely than 6 months ago, but they don't feel isolated anymore because they regroup together. The number of European projects for accelerating integration more quickly than in the past is impressive. I can tell you that in 6 months' time, Europe will be very different from 6 months ago. All that because there has been a fundamental reset reboot of the US reality. And we respect the vote of the American citizen, but we don't have to bear the consequences on the other side of the water of this vote. So we are adjusting to the new reality. And from a US perspective, you have to understand two things. The European project was not invented, as President Trump said, to screw the US. It was invented to build prosperity in Europe. And it is a fundamental existential project. We do it because before Europe became a political project in 1945, 1957, the reality of Europe before the European Union is one war memorial in every village and one mourning and grieving in every family. So for us, the European Union is the glue to create peace in the continent where for the past 2,000 years, up until the European Union was invented, people were just obsessed about one single thing, which was killing each other. And the European Union is a peace project, and that's why it's existential, and that's why it will never collapse, even if Mr. Putin and Mr. Trump would like it to disappear. That's the first thing. The second thing is that because it's a bottom-up project, it's very complicated. It's done by countries that have 2,000 years of history. It's not like we are trying to build a federal project in a bottom-up way, whereas your federal project in the US is a top-down project. You took a continent where there were native Indians and a massive homogeneous European population came. You put a map with a sort of grid where every state is almost square except the 13 colonies. And it's relatively easy, whereas Europe is a bottom-up consolidation of countries that have a fundamental different history. We Euronext 25 years ago were invented to be an enabler of that consolidation. And we are a tool, and a very powerful tool, and we are very confident that we can make the difference. That being said, it's true that Europe has plenty of challenges. We have demographic challenges because population in Europe is aging, not as much as in China, but still more than the US. We have still welfare states debates. We consider in Europe that health and education are public goods, and everyone deserves access to free health and free education. But in order for that system to be sustainable, we need a tax base that is being debated. We have innovation gaps. There was a time when I was young and slim, years ago, where the GSM standard for in telecom was European and was more advanced than mobile phone in Europe. There was a time when the equivalent of Starlink today was GSM in Europe. Now we have an innovation gap. So we have plenty of challenges, don't get me wrong. But it's 450 million people, actually more than 500 with the Brits, outside the UEU. It's a 20 trillion economy. It's the largest concentration of savings in the planet. It's an unbelievable place in terms of formation of talents. It's a very cohesive society. It's a sort of very large Canada. And therefore, it contributes to the world in a positive manner. And it has also delivered significant projects. People who do some European bashing have to wonder, is the world a better place with just Boeing or with Boeing and Airbus? Maybe the world is a better place with Boeing and Airbus. So Europe has something to bring to the, I don't want to use the word free world, but to the human beings who believe in democracy, prosperity, emancipation, achieving personal projects, etc. And I'm confident that this part of the world has all the resources to make it happen. You never underestimate the magnitude of the wake-up call created by the election of Donald Trump, which has reminded everyone in Europe, in every single household, including what we watch on TV, and where now what is happening in the Oval Office is entering every single household in Europe, where people realize, if it is the new rule of the game, then maybe we need to adjust. And so Europe is accelerating integration projects. Euronext is a factor of acceleration of integration of capital markets, even if European companies and societies have to accelerate their reform agenda to catch up on innovation and on reforming the welfare states.